back with retaliatory tariffs, and the tariffs that were in effect. If there was no last minute deals, that we would see a little bit of a pullback here. So China just hit U.S. beans with a 10% tariff, slapped 15% tariff on corn and wheat, and suspended imports from major U.S. exporters. Meanwhile, the U.S. has jacked up tariffs on China to 20% across the board. So who benefits in this? Brazil and Argentina. So who's gonna suffer on this? We're gonna kind of think short-term U.S. farmers, because Brazilian beans are already cheaper, and now China has zero reason to buy U.S. American ags. So corn now sits down, like we're down 8 days in a row. Funds are bailing, open interest is collapsing, and traders have one hand on the ejection button. But May corn just smashed through support. So unless something bullish hits the wires, we could see a slide to like 440. And wheat, forget it. Like China wasn't a huge buyer recently, and now basically that's not going to happen because they just slammed the door shut there. So unless something flips, Chicago wheat is starting to feel that down pressure on contract lows. You could probably just, deer in a headlight there. So what's the silver lining? Well, I guess you would say like the dollar kind of showing a little bit of strength here, making exports slightly more competitive, but it's not about that. It's all about like no trade talks are scheduled, no deals are in sight, and markets are stuck in fear mode. And if markets are in fear mode, we're taking risk off. So bottom line is, this is a headline driven panic. Funds are dumping, and without like any a fresh bullish catalyst, markets will struggle to find a footing. So don't try to catch any falling knives. Keep your stops tight and stay nimble.